In this video, I'll share with you 9 stocks that I bought in July 2024. If it's your first time on my channel, I work as a finance manager at a top tech company with an MBA in finance and a CPA designation. Starting from March 2024, I'm investing $2,000 each month into stocks. $1,000 of it gets invested into undervalued stocks, and another $1,000 gets invested into dividend stocks. And in July 2024, I invested in 5 undervalued stocks and 4 dividend stocks, and I wanted to share my investments with you. So without any further ado, let's start with my dividend stocks first and go over them one by one. Dividend stock number 1, ADP. ADP, or Automatic Data Processing, is a leading provider of HR management software and services. Their offerings include payroll processing, benefits administration, talent management, and human capital management solutions. At the time of this video, ADP is valued at $96 billion. I bought 1 share of the ADP stock for $236.40. ADP has a dividend yield of 2.38%, which means that the company will pay me $2.38 annually for every $100 I have invested in their stocks. I have already owned ADP as part of my previous investments and decided to buy now because the price went down. So as of today, I own 2 shares of their stock at an average cost of $240.73 per share. I'm investing in ADP because of my personal experiences. For every job that I've ever had with massive companies, I've noticed that all my paychecks are always coming from a company called ADP. So ADP as a company must be doing so well to be able to service all these large companies. And when I was doing my research on ADP, I realized that the company has a strong market share compared to its competitors, and its revenues have been growing consistently over the past 10 years, surpassing $18 billion in 2023. And these were the main reasons for me to increase my investment in ADP when the prices went down, even though I myself may not be their direct customer. Dividend stock number 2, BP. BP is a multinational oil and gas company headquartered in London, known for its operations in exploration, production, refining, distribution, and marketing of petroleum products. At the time of this video, BP is valued at $104 billion. I bought 5 shares of the BP stock at $35.81 per share, for a total investment of $179.05. BP has a dividend yield of 4.71%, which means that the company will pay me $4.71 annually for every $100 I have invested in their stock. Similar to ADP, I've owned the BP stocks previously and decided to buy more as the prices went down recently. So now I own 10 shares of the BP stock in total, at an average cost of $36.97 per share. The main reason why I invested in BP is to diversify my dividend portfolio and get exposure into the oil and gas sector. As of now, I don't have any other investments in the oil and gas sector, so investing in BP was a sort of hedge against market fluctuations in other industries for me. And as an investor looking for diversification, it's important to invest in different sectors and stocks to mitigate risks. Additionally, BP's global presence, diversified operations, and a very high 4.7% dividend yield were the main reasons that made me want to add BP into my dividend stock portfolio. Dividend stock number 3, Stanley Black & Decker. Stanley Black & Decker is an American multinational corporation that produces industrial tools, household hardware, and security products, known for brands such as Stanley, Black & Decker, and DeWalt. At the time of this video, the company is valued at $12 billion. I bought 4 shares of this company's stock for $81.04 per share for a total investment of $324.16. Stanley Black & Decker has a dividend yield of 4.07%, which means that the company will pay me $4.07 each year for every $100 I have invested in their stock. In total, I now have 11 shares of their stock at an average cost of $85.02 per share. I like a few different things about Stanley Black & Decker as a company. First, I like to invest in companies whose products I've personally used or use, and Stanley Black & Decker fits that description. Second, I like to invest in companies with diversified offerings, and Stanley Black & Decker meets that requirement as it has multiple successful brands under its ownership. Lastly, I don't like companies that are experiencing revenue declines over a long period of time. And the revenues of Stanley Black & Decker over the past 10 years have either been stable or growing. So because of all of these different reasons, when I saw that the company's stock price started to decline, I knew that it was a right move for me to buy more of their shares. And dividend stock number 4, UPS. UPS is a global logistics and package delivery company known for its comprehensive supply chain solutions and extensive transportation network. At the time of this video, UPS is valued at $116 billion. I bought 2 shares of the UPS stock at $135.60 per share for a total investment of $271.20. UPS has a dividend yield of 4.78%, which means that the company will pay me $4.78 each year for every $100 I have invested in their stock. So now I own 6 shares of the UPS stock in total at an average cost of $138.29 per share. Dividend companies are usually not the most exciting companies. They are well known, they are stable, and they pay very high dividends to their shareholders. And UPS is a perfect example for this definition, as it's a well-known company that everyone uses, but it's not the most exciting one. I've invested in UPS in the past and the stock was performing well until recently when it started to go down. So I knew that I had to buy more of it at a lower price to lower my average cost per share before it goes up again. And as of now, I have more than a dozen companies invested in my dividend stock portfolio. So each month I can review which stocks are going down to decide to invest more in them. Now let's go into my undervalued stocks one by one. Undervalued stock number 1, Alibaba. Alibaba is a multinational conglomerate holding company specializing in e-commerce, retail, internet, and technology. At the time of this video, Alibaba is valued at $192 billion. I bought 2 shares of Alibaba stock for $72.45 per share for a total investment of $144.90. I chose to invest in Alibaba mostly because of a personal reason. One of my family members is running an e-commerce business in the US and is sourcing a lot of the products for the business from Alibaba. That experience seems to be going great as my family member was able to find more cost-effective and higher quality products than what was available in the US at the time. And given Alibaba's strong market presence and growth in China and globally, I think the stock price has even more potential for future growth. So despite some recent regulatory challenges that Alibaba has faced, I believe that the company is undervalued and is the right investment for my undervalued stock portfolio. Undervalued stock number 2, Baidu. Baidu is a Chinese multinational technology company specializing in internet-related services and products and artificial intelligence. At the time of this video, Baidu is valued at $35 billion. I bought 1.25 shares of the Baidu stock for $87.14 per share for a total investment of $108.92. So after Alibaba, Baidu was the second and last Chinese company that I chose to invest in July 2024. I have featured Baidu in one of my recent videos about 8 AI stocks that I suggest to invest in 2024, and that was my main reason to invest in it myself as well. Baidu is like the Google of China. Baidu's search engine dominance in China and their innovative AI initiatives made it a compelling investment for my undervalued stock portfolio. Undervalued stock number 3, MasterCard. MasterCard is a global financial services corporation known for its payment processing networks. At the time of this video, MasterCard is valued at $409 billion. I purchased 0.5 shares of the MasterCard stock for $445.10 per share for a total investment of $222.55. I invested in MasterCard because of its strong market position and the consistent growth of its annual revenues. MasterCard operates in something called a duopoly, where only 2 companies are dominating the entire market. And in this case, the 2 companies are MasterCard and Visa. And as the world continues to digitize money and payments year after year, I think this duopoly has opportunities and potential to grow even further. Undervalued stock number 4, Visa. Visa is a global payments technology company that facilitates electronic fund transfers worldwide. At the time of this video, Visa is valued at $532 billion. I bought 1 share of the Visa stock at $268.88. Since I invested in MasterCard because of its strong revenue performance and the fact that it operates in duopoly, it made sense for me to also invest in the second company that operates in the same duopoly. And Visa as a company is probably even more well known than MasterCard because most of our personal credit cards say Visa on them. Similar to MasterCard, Visa is consistently growing their annual revenues year over year, surpassing $30 billion in 2023. Visa's strong fundamentals and global reach made me more confident about adding it into my undervalued stock portfolio. Undervalued stock number 5, Nvidia. Nvidia is an American multinational technology company known for its graphics processing units or GPUs and AI technologies. At the time of this video, Nvidia is valued at $3.2 trillion. I bought 2 shares of Nvidia stock at $124.67 for a total investment of $249.34. Nvidia is probably the most popular and talked about company in 2024 so far. I've recently featured Nvidia as part of my top 8 AI stocks to buy in 2024. Since I've done my research and considered the future potential of the company in that video, I decided to follow my own advice and invest in Nvidia now. I know a lot of people are not investing in Nvidia, saying that the current valuation is already too high. But I'm very convinced in the future of AI and Nvidia being at the forefront of it. So overall, in July 2024, I ended up investing $2,005.40 across 9 different companies. 5 of the companies are a part of my undervalued stock portfolio, and 4 companies are a part of my dividend stock portfolio. Each month, I also give you an update on how my stock portfolio is performing, so make sure to check out those videos as well. Thank you for watching this video, and I'll see you in the next one.